Hello and welcome to Investing Confidential. Is the US government bankrupt? I mean, I've been looking at the recent headlines, especially the last couple of days. And if you were an accountant, if you were a legitimate financial analyst on Wall Street, if you were a legitimate someone working for Fitch or S&P, and you did a real deep dive into the U.S. government finances. Uh, if you take away the fact that the US government can just keep printing money, the US government's bankrupt. End of story. And I mean, you may have probably didn't see these headlines that came out last couple of days because they've been kind of laid low and hidden. But US Treasury auctions, okay, and Treasury auctions are the way the US sort of raises money. They go into the market and people buy bonds, foreigners, local banks, US banks. And it's kind of an auction where the US comes out with a specific yield and they try to sell at those yields. So this week, the US tried to sell 10 and 30-year bond yields. And as you can see here, these auctions failed, folks. Okay. When I mean they failed, that means there were no buyers at the rates the government was trying to get. Now, this doesn't happen. Okay, it just doesn't. Over the years, it's happened a few times, but it just doesn't happen. Again, U.S. debt, U.S. dollar, U.S. dollar is the currency of the world. Okay, U.S. Debt is supposedly the safest debt there is in the world. And as you can see here, there was no interest. People wanted higher rates. Okay, especially foreigners, because the U.S. is technically bankrupt. Okay, and there's no way to get around it. Okay, if you were going to buy a house or just buy a car, whatever, and you went and people say no, you can't borrow any money. You're done. Okay, most likely, you've had really bad credit. You've had a bankruptcy in the past, and your credit rating is below 600. You can't borrow money. This is the U.S. today. Now, sure, the U.S. is not going to go bankrupt because the Fed could keep printing money, but it tells you the state of our economy. You know, the White House, Wall Street analysts are telling us the U.S. is going to grow 2.3, whatever, 2%, whatever it is. These are all numbers are all fallacy anyway. And they're telling us that the unemployment's all-time low, the economy is in great shape. Airlines are up a couple of days like today because they were booming. Everything's booming, 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 booming. And yet, the U.S. government can't borrow money. I mean, do you realize the lies, the fake information? I mean, I'm not going to go through it, but I have gone through it over the last year, and I've showed you all of the data that is just garbage. The job data, okay? Jobs versus employment. Jobs going through the roof, going to basically foreigners, employment, full-time employment going down. That's Americans. That's the reality of the job data. CPI, completely manipulated. But they can't manipulate it any longer because oil's going through the roof because of the wars and the amount of money we're throwing out of this country, not spending it internally. Okay, and here you see the issuance. Okay, this is the Treasury essentially issuing money, and this is all part of this whole money printing. Okay, and as you can see here, I mean, look at the amount of issuing that we started in right around the pandemic level. It's unprecedented, the highest ever. It's insanity. Okay, you can tell me, yeah, over the years, we've always issued money. Every president, right? Sure. Great financial crisis. It came up a lot. was stable. The amount was stable through the Obama administration and even through the Trump administration. But look at 2020 and beyond. It's insane. It's insane. And now you can understand why the economy is still moving. Has nothing to do with what's happening on Main Street, what's happening to the middle class. This is all stimulus. We're still government stimulus. This is a fake economy, completely and utterly fake. We're issuing so many bonds in the trillions and trillions. And look, it's not going to stop. Here's debt maturing. Okay, look at the maturations coming. It's massive. We have massive amounts of debt maturing. Massive amounts of debt. And remember, during the Obama and the Trump administrations, we were financing things at very short term, very low rates, right? It was almost, look, at times it was zero, negative. And now it's 5%. Again, those same 1 year, 6 month where we feasted and we were like drug addicts. Instead of refinancing at 10 years, they're refinancing 1 year, 2 years, 3 years, whatever. And now the chickens are coming home to roost because we've got more public debt maturing. And when your 1% or 0% debt comes mature and you got to pay 5%, this is what happens. Interest payments for the US Treasury going through the roof. Through the roof. This is unsustainable. Absolutely unsustainable. And then no wonder nobody wants our debt, and no wonder our treasuries auctions are failing. Folks, they're failing. This is what happened in Japan many years ago. What did Japan do? Financial repression. I've mentioned they just buy their own debt. They print money and buy their own debt. And you don't think that's happening today, and that's going to continue to happen. But that's a spiral. It's a death spiral. Japan was in a bear market for 30 years, 30 years before they had a new high just recently. I mean, I'm not making this up. And it's not just the US, okay? It's New York, it's Illinois, and here you see California. California owes today 1.6 trillion. Do you know in mid 2020, when the government, basically printed all that money because of COVID, supposedly, the COVID crisis, they bailed out New York. California was at a surplus. The US government gave them a ton of money. They paid off all their debt, bailed them out. Same with New York, same with Illinois. And they had a surplus. So less than 4 years later, these guys owe 1.6 trillion. State of California. Gavin Newsom. And this is the second guy that they may put in instead of Biden. I mean, this is the insanity. This is the insanity of government. It doesn't care if it's Democrat or Republican. They're all the same. But it happens to be the Democrats are the ones with their hands out on the printing press, destroying the country. Okay, so California, New York, Illinois, those 3 big states, 3 big cities, they are as bankrupt as the US government. Probably even worst case. And then, look, this just feeds into everything. We've looked at poor credit card balances continue to explode. Forget about this deflated nonsense. This whole real deflation. Don't worry about that. Look at because remember, you as a human being, okay, you as a person, when you owe $10,000, you owe $10,000. You're not adjusting. No one's adjusting your balance for inflation. So forget that garbage blue line. Look at this black line again, 2020. It's exploded. People are living off credit. The US government is living off credit. This is a death spiral, unsustainable, because I'm not going to show this again, but I've shown the rates. The credit card rates the banks are charging are the highest in history. 25+%, the highest in history, and they're making a fortune. But, and there's a big but, the delinquencies are skyrocketing. So it's not going to last forever. And so, since this is an investment, channel, what do we do? Okay, and as you saw, as you can see, when you have this kind of volatility, you look to gold. Okay, for 3,000 years, gold has been a form of store of value, a currency, whatever it is. Okay, I'm not going to comment on Bitcoin here, but Bitcoin, because of its inherent structure, is a form store. It should be a store of value. It's too crazy right now, and because, as I told, every time another cryptocurrency, it dilutes Bitcoin. So when all the cryptocurrencies are gone, Bitcoin will probably explode. But let's not talk about Bitcoin because it's only been around a short period of time. Gold. Is it overbought? It's exploding. Probably in the short term because of this. Folks, I'm not making this up. I mean, Costco is selling out of gold bars. You can go into a Costco and buy gold. And who's buying most of the gold bars? Young people. That's what the statistics say. And I'm sorry, but this is a classic sign of a top. Okay, when you could just walk into a Costco, you could buy gold bars. But I understand it. I completely understand it. And the last chart I'm going to show you here is just very long term. It's kind of funny. But here, we look at, I mean, this is probably the longest term chart you'll ever see. And what it shows is the price of money, right? The price of money, the rates, interest rates, and the price of money, what it costs. And there's data going back 5,000 years. Funny, isn't it? And right beginning of the financial crisis, and then obviously COVID, we've seen a unprecedented low, historical low, 3,000 year, 5,000 year low in interest rates. Okay, globally, right? Remember, Europe was negative for a very long period of time. We touched negative for, 6 months. But the global price of money was the lowest in 5,000 years. It doesn't stay. It's impossible. And I know that everyone says, oh, they want the Fed to cut rates and all this nonsense. Look, folks, the Fed has shown its stripes. Powell is a little man in the pocket of Carlyle and Blackstone, private equity buddies. The Fed has made a policy error. Okay. Now you can come back at me and say, hey, the Fed didn't make no, the Fed made a policy error. Even if they didn't do it, they actually made one. That's as good as cutting rates from the market perspective. And the stock market ripped. S&P, the bonds, everything ripped. All financial assets went through the roof. And it was false. Because here's Powell, the same moron who told you in 2021 that inflation was transitory, is the same idiot who says we're almost at his 2% mark and we're going to start cutting rates. Even if we're not at his 2%, we're going to start cutting rates. Why would you cut? It made no sense. I've never seen throughout my 30 plus years involved in financial markets, cutting rates when you have all-time low in unemployment, an economy that's supposedly booming. Folks, they've been lying to you. The economy is, the reason that they want to cut rates is the economy is imploding. You just don't know it. But they have locked themselves in. They can't, because inflation is going through the roof, or at least not going down. And crude now is, and again, I've talked about this. Crude has been breaking out, and I told the last few videos, there's no chance of a rate cut. Zero. But friends at Goldman Sachs are still saying there's going to be a cut in July. These people are insane. You've got escalated war in the Middle East. There is no possible way that oil is going to come in. So CPI will remain elevated, as well as anything on the commodity level. It's all going up. Coffee, everything going up. So the price, the gasoline price at the pump, all your food, which went up, never came down, is going to keep going up. And now they're talking about the Fed raising rates again. I don't think that's going to happen. But certainly, we're not going to see any rate cuts in 2021, most likely not until 2026. By that time, but who knows? But because obviously we have a election year, these rate cuts were all political. Okay, so forget about rate cuts. The political rate cuts are gone now. So Joe Biden's going to have to win on his own. He's not going to get help from the Fed. And I'm not going to talk about the stock market right now, and I'll talk about it in the next video. But the S&P was holding up on all these hopes of a political rate cut. That's gone. So the S&P most likely has topped out. And we'll show signs of that on the next video. So inflation going through the roof, but more importantly, the US government is technically bankrupt. Now, it's not going to go bankrupt because the government could just print money. But when you're in a financial situation like that, the US is no longer a high FICO score credit. They're a low FICO score credit. It's going to pay higher rates. And this is going to affect growth. The manipulated GDP is going to go lower because they're not going to have the money to fund. That's why you're seeing these debates on the Ukraine, all this being stalled. There's no money. These people have no money. So this is a rocky time. Okay, the markets have topped out. I think people are seeing through all of the fake news. So if you're an investor, be very careful out there.